Welcome. In this video, will Onyxcoin start an uptrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the important structural elements to note on the chart is that the price action has a curvilinear support line rising upwards from the bottom. This kind of curved upward slope is very important in technical analysis because it not only offers support at certain levels, but also reveals the general trend of the market. At the moment, price action is running parallel to this curvilinear support line that climbs from the bottom to the top. If the price touches and regains upward momentum without breaking the curve, this would signal the continuation of the uptrend and paint a very positive picture for investors. When the curve moves from bottom to top, it indicates that the market is in a dynamic uptrend. This type of curve represents a more flexible and natural uptrend compared to classic straight trend lines. This is because the market doesn't always move in straight lines. It moves in choppy, smooth transitions from time to time. This type of curve is psychologically more trusted by traders because it shows that buyers are re-engaging at every dip and the price is not accepting lower levels. The curve support line represents this inherent strength and determination in the market. If the price continues to stay above this curve, it indicates that the market is in a healthy technical uptrend. Especially when the price touches this curve, buyers enter the market heavily and push the price back up, confirming that this curve is a strong support point. In technical analysis, such structural supports play a crucial role in determining the direction of the price. If the price sticks to this curve and bounces upwards every time it touches it, this creates a positive environment for both short-term and long-term investors. The more respect traders show for this curve, the more positive the overall psychology of the market becomes. This is because bullish breakouts on every contact create the perception among investors that this curve is a strong support point. This, in turn, boosts technical confidence and helps clarify favorable entry zones for traders looking to open positions. Swing traders and medium-term traders, in particular, plan their positions by closely following such curves. If this curve doesn't break, meaning that the price touches this line and heads back up, it indicates that the buying pressure in the market remains strong. This strengthens the expectation that the uptrend will continue. If the price continues to move on this curve, this structure also supports the rising lows pattern on the chart. Rising lows are one of the strongest signs of a healthy uptrend in technical analysis. This increases traders' positive expectations. In addition, this type of curvilinear support line covers a wider price range than classic trend lines and is therefore considered a healthier technical structure. Whereas straight trend lines usually only intersect the price at certain points, curvilinear trends better adapt to the fluctuating nature of the price and create a more realistic support area. This provides a stronger basis for technical analysis. If the price touches this curve and rises again, it shows the market's confidence in this structure and could herald a potential bullish wave. From a technical point of view, maintaining this curve makes it easier for the price to not only hold at current levels, but also make its way to new highs. This is because as market participants see this curve working, they tend to set their next price targets higher. This ensures that the supply-demand balance tips in favor of buyers. This psychological effect is one of the main factors supporting the price to rise. The longer you stay above this curve, the greater the potential for price acceleration. Especially if the price bounces off this curve and makes an upside breakout, this can create a technical momentum explosion. Because a bounce in line with technical structures would lead to an increase in buy orders, which would push the price higher. But we can't decide the analysis with the curve alone. Let's look at other metrics. Stay tuned. One of the most notable structural formations in the chart is the clear indication of a classic W pattern. These types of formations, also known as double bottoms in technical analysis, are often among the reversal signals that indicate the end of a downtrend. Currently, the price action appears to be in the process of forming the second bottom of this W pattern. This situation suggests that a highly significant technical breakout may be imminent for investors. Indeed, price movements following the second bottom of W formations often result in sharp and high-volume upward moves. The W pattern is considered one of the most reliable reversal formations in technical analysis literature. Especially following a downtrend, this structure signals that selling pressure in the market is decreasing and buyers are beginning to regain control. The first bottom typically forms as a result of panic selling. The subsequent peak is created as the first group of buyers steps in. The second bottom confirms that investors do not see as strong a selling pressure as during the first decline, and this level is seen as a significant support zone. The fact that the price is currently at this second bottom carries strong technical significance. This second bottom is not just a support level, it also represents a psychological barrier. Investors pay close attention to this level because a bounce from here can signal not only short-term gains, but also the beginning of a longer-term trend reversal. If an upward move occurs from this second bottom, it technically projects a target equal to the height of the formation. This means the price could reach significantly higher new target zones compared to its current levels. Therefore, the current price zone is both attractive and technically promising for investors. The sideways movement forming at the second bottom also reflects a state of balance in the market. Neither buyers nor sellers dominate at this level, indicating that it is a critical decision point. If this balance tips in favor of the buyers and an upward move begins, it will activate the formation and technically confirm the successful completion of the W pattern. If this breakout is accompanied by a rise in volume, it shows that the upward movement is built on strong foundations and attracts new buyers into the market. One of the most critical aspects of W formations is when the second bottom forms at a higher level than the first. This indicates increasing bullish momentum in the market and weakening seller strength. The structure currently observed on the chart meets these positive technical conditions. If the price holds at this level and starts moving upward toward the neckline, it will be a strong candidate for completing the formation. The neckline of the W formation typically corresponds to the peak between the two bottoms. If the price reaches this level and breaks through with high volume, it technically confirms the formation. Such a scenario would indicate the start of a new upward trend. The target for this move would be the same as the depth of the formation. That is, a move equal to the distance between the second bottom and the neckline would define a new target area to the upside. The current price action at the second bottom of the formation represents a potential bottom for investors. These kinds of levels can provide highly favorable entry zones in terms of both technical analysis and risk-reward ratio. A clear stop-loss level can be set just below the formation, while the upside potential covers a broad range. This presents a technically favorable opportunity for investors. MACD, the Moving Averages Convergence and Divergence Indicator, is one of the most reliable technical indicators for analyzing the direction and strength of the momentum in the market. Looking at the current chart structure, we can see that the MACD indicator has finally started to move above the zero level after trending sideways or weakly below it for a long time. This is a signal of a potential turnaround in the markets and should be considered as a positive development for investors. In particular, this kind of zero-level breakout is a clear indication that prices are starting to gain upside momentum. A MACD crossing the zero line upwards is interpreted as a trend reversal signal in terms of technical analysis. This level indicates that the MACD's short-term moving average has moved above the long-term moving average. In other words, it signals that the short-term momentum in the market is starting to turn upwards again. This is a strong technical development, indicating that buying pressure is increasing and investor psychology is shifting to the positive side. On the current chart, we observe that the MACD lines have moved above the zero line, which may give a stronger basis for the price's upward movements. The intersections of the MACD lines are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.